Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be analyzing the first commitments of Treasury report of 2023. And as we always do, we shall start off by looking at the largest changes in commercials positions. Before I jump to the review, just a brief reminder for those who are new to COT analysis. Here at COTBase.com, you will find a lot of educational material explaining to you what the COT report is all about and how you can actually benefit from this highly valuable data. We also have some very useful videos here at COT Base that will guide you through the analysis process. So back to the review, and starting off with our first market, the Brazilian Real, which we are analyzing, of course, the classic COT report type, and we're analyzing the net positions, futures, and options combined data type. So as you may see, we have the Brazilian Real on top of our list with a 32% change in commercials net positions. Commercials represented with these, this red chart over here. You can see large speculators on a green chart and small speculators on a different scale chart in blue. They're obviously not trading in that high volume. This COT change is much greater than average, top 10 definitely. It is a bearish COT change signal suggesting weakness in the next couple of days. And if we open the 5 years chart, we get a chance to examine the stress levels in this market. You can see that with this sudden change, we are shifting and moving towards bearish COT extreme levels, but honestly, not such an exciting conclusion from the stress level analysis. We had a more significant bearish extreme in the middle part of last year at these tops. You can see the market just went a bit lower, nothing too unusual. Honestly, maybe not the market that I'd spend too much time on. The change signal, of course, is a bit larger than average. If you are someone looking for an opportunity downwards, you may take that as a supporting factor, but not that exciting news from the Brazilian Real regarding the COT report. Next market, however, is the rough rice. And of course, if we switch to the 1 year chart, we get a chance to examine this 15% change, which is larger, no question. However, we have seen greater changes the past couple of months. You can see a successful buildup of bullish COT change signals just preceding this rise in the market. Then once again, so obviously this recent change is something we should be talking about, but I always take the opportunity to examine what happened to the market after larger than average changes. Now, this is a bearish COT change signal. You can see that the last one was greater and it actually pushed the market lower. I wouldn't consider this one in any way, actually. I'd simply move on. I'd say, well, hey, we had a larger than average change size last week. It was successful, pushing the market back down. And that's pretty much it. We can conclude that change signals in the rough rice market, at least in the past 6 month time period, seem to be successful. So that's an important information. Moving on to the 5 year chart, you can see that we have been more of in more of a bullish COT extreme territory. So we're not surprised to see the market continue its rally. We, of course, moved away from those levels in the past 2 reports, but definitely not reached any major bearish extreme. We're more or less in between the 2 extremes on this 5 years chart, as you may see. The next market is an energy market, natural gas, where we have a 11% change in commercials net positions. This time we are talking about a bullish COT change signal. As you may see on the chart, the size is probably larger, but definitely not too significant. The only good news is that it is coming after a decline that's been going on in the market. So I tend to believe that COT change signals in the opposite of the trend are actually more successful. But you should always look at the stress as well. So if we have had a major extreme in the market, you may want to examine that in correlation to the change signal. Now, what we have here is actually a buildup on the bullish side of the market. So as you can see on this 5 year chart, we had a bit greater extreme, 200 and 20,000 contracts net long level in case of commercials. We are not there yet, but we are headed in that direction as the market is gradually declining. So it is showing that we may actually reach a bottom in the next couple of weeks and month ahead of us. So the medium to long-term picture from the stress analysis is definitely bullish. The short-term picture is bullish, but I wouldn't consider this 11% change to be that big of a deal. It's not that large. You can see a change signal that I would consider more exciting over here. We had a few possibly on the beginning, but honestly, I think we can conclude that in natural gas, we don't see that big of a change from week to week in traders' net positions. So COT change analysis might not be the tool to use on this market. Moving on to large speculator COT extreme analysis, we've got the crude oil on top of our list with a 357 report extreme. In large speculators, it is undoubtedly a bullish extreme. However, with crude oil, caution is advised. These extremes, even all-time COT extreme, can be present in the market for many, many months before anything happens. You know, it's just there. It's good to know that, you know, anybody trading this market, the stresses are building up towards the bullish side. Doesn't mean that we can't see crude oil further decline, but it's something to be noted. Soybean oil, our next market, 242 report extreme over here in large speculators. Again, very clear signal. And as you may know, if you've been following me, soybean markets are actually pretty good to analyze with the COT analysis perspective, because they tend to be successful on how they react to different signals. As you can see, the one I'm showing you from October of 2020, what a beautiful example of a bullish COT extreme signal that I think is great. Here we have another example of a bullish extreme. Of course, the one we are analyzing right now is a bearish extreme. So let me show you one on this 5-year chart from 2018, catching that top. So again, bearish COT extreme present in the market, suggesting a top developing soon. I think this is probably the most exciting market for this COT review that I'm doing. That I think anybody who's interested in trading this market should definitely consider. Now, as I have been doing in the past couple of months, I always choose a market. This time it's crude oil, and show you the capabilities of our wonderful iCOT intraday indicator and the version which is combined with the AfterSignal. So just for those who are joining, so we've got the iCOT intraday indicator, which we developed after many years of research, trying to come up with a tool that mimics there's similarities with classic COT analysis. So you can see here we have this score chart. This is our own data. It is not CFTC data. We do name them similarly, but basically what it does, again, stress analysis, it helps you pinpoint shifts in the trend. However, not on a weekly basis, but as you may see, this is a 1-minute candlestick chart, and we can actually catch pretty good moves. Now, what the AfterSignal does is actually helps you filter out a bunch of signals. So for example, here you can see these markers coming after another, but you actually enter the trade later on when it is confirmed. The same thing applying over here, or we can just choose the opposite. We get bullish bullish signals from the iCOT intraday indicator, but entering the market once it is confirmed. So you can see this 1-hour candlestick chart on crude oil, how well we actually caught the top over here. So this is obviously, I think, something we are more interested in. And you can see that's the 1-hour candlestick chart, and you can go down into the very micro time frame and see what it does. The 15-minute, again, pretty successful, and you can go down into the 5-minute time frame. I think this is a very good supplementary tool to the longer term analysis that classic COT analysis offers us. So that's it for today. Thank you so much for joining me. I hope you have found this review to be informative. And I wish you a pleasant weekend. Hope to see you in my next COT review. Take care. Goodbye.